Good evening and welcome to another edition of the ShadowTrader Video Weekly for Sunday, January 13th, 2019. I'm your host, Peter Resnick from ShadowTrader.net. 2600 or bust, what does that mean? Well, it's the key level in the SPX that we've had a lot of trouble getting through this week. We're going to talk about the implications of that key level coming into next week. Market profile structure, market internals, why are they so important? I made a lot of mention of the poor structure on the way up, especially as it pertained to that plus 1,000 Dow day that we had a while back. Since then, the market is definitively higher, but I don't think a whole lot has changed. So I'm going to show you all the details of that as well. Just above us, key resistance. In fact, a confluence of technical resistance is just above us, just ahead of that key 2600 in the S&P. We're going to talk all about that as well. And I'm going to leave you with a short focus list of some stocks that I'm looking at for next week's trade. All right, let's get to it. All right, so SPX 2600 or bust. I'm going to start off with this futures chart here of the ES and show you what the activity was Wednesday, Thursday, and Friday. This is the Wednesday high, as you can see, just a couple points away from 2600. Then on Thursday, it happened again. And then on Friday, twice. So this is the 2600 number, and we're coming very, very close, but we haven't touched it. Now, the question I get from a lot of people is, well, shouldn't it be resistance? Should we short the market? Well, I believe that the market wants to move a little bit higher, because if this was the resistance, I think we would have backed off a lot more than just this. You can see even here, this retracement back was only about 30 points, not even, and then we ran right back to that 2600, and then since then we've just had these very, very minor retracements, and we've kind of been building up pressure. So one of the things that's really important I always like to talk about is that if you're looking at a key support or resistance level and you want to either buy or sell there, and if the instrument that you're looking at comes very, very close to it and backs off, when it gets there, the original trade that you wanted to do is no longer valid. So you do not want to be shorting that 2600 early next week. You want to be expecting that we probably break through it at this point. All right, so let's continue on with what I was talking about, the structure and the internals. If you recall from a couple weeks ago, I was really kind of down on the big 1,000 point rally, which was here in the Dow, because of this structure here, so thin. And I don't have the volume on anymore, but I believe I showed it to you before where I said there was almost no volume in any of these price levels. I couldn't believe it. I had never seen that before. The whole thing was very, very thin. And since then, I don't really think that things have gotten a lot better, because if you look at here, how did the market advance here in the next 3 days in these sessions here with overlapping value? And notice that the point of control here didn't move up, point of control here in the middle, and here it moved up. This is kind of an interesting tell that the most volume traded on this day was in the lower end of the range. Okay, then you had a little bit of a pullback here in early January, and then you had another rally start off. And the rally here, letter P, short covering, again, very, very poor structure, lots of single prints, and finally catch a little bit of balance up here. Then we move up a bit again, and once again, the next day, same pattern. We have a profile that's shaped like a letter P, and again, more short covering here. Lots of emotion, lots of single prints. And that sets the stage for the rally that took us into this week. And notice that once again, the value was overlapping. Right? These 2 days, overlapping value, this a little bit clean, and then here, again, just overlapping value, and an overlapping value at the same time as you did make a higher high. So it feels like the market is struggling. So I've just shown you basically how going all the way back to the big rally day, there really isn't anything you can point to that is really any type of strong structure in the market profile. Another thing that I've been looking at, which I look at all the time, obviously, is the internals. This is the quad screen that we talk about in ShadowTrader. And most importantly, let's look at this advanced decline line. Here's the advanced decline line every day. This is obviously divided by days. And notice the pattern here of here. This is last week, and this is all of this week. And it just is less and less, where the advancers and decliners seem to be moving up to a lower number over the last 5 days, but at the same time, when I switch this ES back to the daily, what has the market been doing during that time? The market's actually been moving up during that time period. So I'm seeing a little bit of divergence there in that sense. Okay. Now, where is the market going to turn? As you can see, the tone of this video is that I think that the turn is coming soon, and I want to show you a confluence of resistance that's going on. If you recall, this is the large box area. I said that eventually when the market finally breaks down, it would double the box range, and it did. It went actually to target. This amount was the amount that it went down, plus a little bit more. But now here's where I'm seeing the resistance coming up just ahead. The most important thing is, of course, the downtrend. Now that we've actually been able to anchor 2 points with a much lower high, we actually have a downtrend in place. I mean, this is obvious. The market hasn't been going up now for a while. It's actually been moving down since about October, but now the downtrend is actually in place, the longer term, because we anchor here from the all-time high to this first lower high with the swing out method, meaning we just take the trend line, swing it out in the first place that it touches. And where does that get us to? Well, in the SPX, that's going to take us to up here, right up in here. This is our downtrend. But before we get there, and if we do, I don't know, notice the resistance that's happening here from some key levels. If we take the Fibonacci retracement from just this last move, that is actually just above us, and it ties in perfectly with the 50 MA. 50 period moving average is actually right there. So this is why I think that this is going to be a little bit of resistance here as we move up, and that number is about 26.2892. So be aware, this is going to be very key. And here's where it really gets interesting. Notice that you could argue that the bottom of the box is here, but really, to me, the bottom of the box is actually here, because look at how many touches were here. This is 1 low, there's 2, here's 3, here's 4, there's 5, here we stopped here, 6, we had a false break, and then when we rallied, we stopped there again, and then when we finally went down, where did we begin the breakdown from? Right from this 26.28 area. This is exactly where we began the move lower. So that's why I think all of this tying in is the confluence of resistance that should put some headwinds onto the market. And continuing on with that theme, if we look at NDX, I've drawn in the downtrend here, very, very important. Starting here, anchor here, and notice that it's just above us. This is not a lot of distance for the NDX to travel. It's 6,600 up to about, we're closed here at 6601, excuse me, and this is taking us up to about 6750. So we're looking at about 150 points higher in the NDX, which is not really much. You could do that in one day. All right, so how to play this into next week if it plays out the way that I was saying. I told you I would leave you with a few names. One of the things that I find interesting here is Netflix. Netflix is showing a lot of relative strength. I will be the first one to admit that, but it is coming up to also its first major resistance point of its newly formed downtrend from the all-time high there to the first lower high and right here, and it's at a round number just under 350, so you want to be looking for that. Okay, Intel is another one that occurred to me that would be a good short if the market hits that resistance. Notice you've got very, very strong resistance here in the $50 area. We're getting very, very close there, and we've also ran 100% all the way from the low end of the range, so I think that we would come back at least to the middle, about to the 46, 47 area. That's India November Tango Charlie. Also Intuit coming up to similar downtrend. This will be here around the 210 area, so I think that could also be in play. And then last but not least, I will mention that Google, to me, is showing some relative weakness. Notice that the pullback in Google here has been a lot deeper than the market, so we could easily, we're kind of sitting right on the trend line here. Google could easily dribble lower down into this kind of mid area, I think, down into here. So that would be a valid trade as well. All right, so just to recap, we've got the market bumping its head up against the key resistance of the 2600 level. However, given the fact that we've come so close to it over the last 3 sessions and not broken, I think that it's probably going to surprise people by going slightly higher, and then we'll run into that perfect storm of resistance that I was just showing you in the SPX and NDX. All right, that's going to do it for this week's video. So remember, key 2600 level in the SPX next week, along with a lot of that confluence of resistance just above us. It's going to be a very, very pivotal week, I believe, to tell us how the month of January plays out. So good luck out there. Be safe. And on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.